No one expected this moment to arrive so abruptly, and yet here we are, staring straight at a development that has caught analysts, investors, and everyday observers completely off guard, because the Central Bank of Iraq's digital green light initiative has shifted the direction of the conversation in a way that no one predicted. And before we dive deeper into this breakdown, make sure you stay with me, stay engaged, and subscribe so you never miss a single update that could impact your financial awareness going into 2025. What unfolded in the last few days has created a wave of analysis and speculation, not because it signals chaos, but because it represents a strategic recalibration that carries implications for liquidity management, cross-border settlement technology, and how emerging economies align themselves with broader digital trends that influence global markets. When people first heard the term digital green light linked to CBI operations, many assumed it was simply another announcement in the long chain of Middle Eastern financial modernization efforts, but this shift is far from symbolic. Instead, it signals that Iraq is increasingly positioning itself to integrate digital banking frameworks, streamline money movement, reinforce regulatory oversight, and prepare its monetary architecture to eventually support faster, safer, and more predictable currency operations, including those tied to the dinar's exchange behavior. Observers have been trying to interpret whether this digital authorization hints at a deeper monetary transition, or if it stands mainly as a technological upgrade that protects the banking ecosystem against fraud, inefficiency, and manual processing bottlenecks. Yet, what stands out most is how the timing aligns with global moves toward digital tracking, automated clearing, and smart ledger-based confirmation systems. These shifts do not automatically signal a revaluation or an overnight exchange rate jump, but they do indicate that Iraq is trying to design an environment where monetary policy tools can be more adaptive, decentralized financial interactions can be monitored without restriction, and the nation's currency can be handled with transparency that strengthens both internal investor trust and external international confidence. Many analysts believe this is the type of infrastructure foundational work that precedes more ambitious policy decisions, and even though nothing is guaranteed, the digital restructuring offers the framework that would make future monetary adjustments smoother and less susceptible to external distortion. As Iraq continues stabilizing oil revenues, managing debt to GDP expectations, and trying to build a more productive internal banking culture, the digital green light effectively becomes a catalyst that pushes local banks toward accountability, enabling faster data visibility and compliance automation that aligns with international norms. This is why people across the financial community reacted with surprise, because the move demonstrates that Iraq is not waiting for global momentum to force a shift. Instead, it is choosing to participate intentionally in the global digital currency ecosystem, and that alone elevates the conversation about the dinar's long-term trajectory, even without predicting any immediate RV-related event. Before we explore the deeper layers of what this might mean for exchange rates in 2025, make sure you stay until the end and drop your thoughts in the comments, because your voice helps shape the analysis that we bring to this surrounding the digital green light announcement continues to spread through investor forums and currency watching communities. The real question forming behind the scenes is about how this structural shift will influence the broader mechanisms governing Iraq's exchange rate behavior in 2025, and understanding that requires a closer look at how digital banking environments change the way central banks measure volatility, track circulation patterns, and detect discrepancies that previously required manual investigation. In a digital-first monetary environment, liquidity does not simply flow, it is tracked, analyzed, categorized, and stress-tested in real time, meaning the Central Bank of Iraq gains the ability to respond to inflationary pressures and market distortions with faster corrective measures. Some experts note that this aligns with Iraq's long-standing goal of strengthening the dinar's stability by reducing dependency on legacy systems prone to misreporting and delays, a shift that could eventually open pathways for more substantial valuation alignment as the country continues to integrate banking reforms with transparency expectations from international observers. Even though digital modernization does not automatically trigger an RV event, it undeniably strengthens the infrastructure necessary for any future large-scale monetary action. And this is exactly why analysts keep associating the current developments with revaluation discussions. What makes this moment so unique is the dual nature of the shift. On one hand, it is purely technological, aimed at modernizing Iraq's financial backbone, but on the other hand, it indirectly amplifies Iraq's readiness to participate in a globally synchronized financial ecosystem where currency behavior is more predictable and globally traceable. When central banks adopt digital monitoring systems, fluctuations triggered by black market pressures become easier to isolate, foreign remittance irregularities become more visible, and speculative behaviors that distort exchange rates lose their ability to hide behind fragmented data. Iraq stands to benefit significantly from this change because one of the biggest challenges the dinar has faced in the past is inconsistent reporting across private banks and money transfer channels, something the digital green light intends to neutralize by creating full-spectrum insight. Investors who watch the dinar closely are now analyzing whether this structural clarity will accelerate Iraq's alignment with international banking expectations that often precede currency status upgrades or recalculations. Again, it is important to recognize that no official source has announced a revaluation, but what is emerging instead is an ecosystem that could sustain one should Iraq one day decide to pursue it. The fact that this development arrived at a time when the United States dollar continues experiencing shifting demand patterns and global markets explore alternative settlement options gives even more weight to Iraq's decision. Because the dinar's long-term value depends heavily on Iraq demonstrating financial maturity and digital compatibility. As Iraq continues navigating geopolitical relationships, oil revenue forecasts, debt management strategies, and internal economic diversification plans, these digital reforms may gradually reshape the narrative surrounding the currency's future potential, making 2025 a year where greater visibility and structural clarity guide decision-making more than speculation alone. And as always, I invite you to stay engaged, share your opinions, and help build a community that evaluates these developments with clarity. The most compelling part of this transformation is not the immediate reaction from the financial community, but the long-term implications that digital authorization from the Central Bank of Iraq carries for everyday users, traders, and international observers who rely on consistent, transparent currency behavior to make decisions that influence personal investment plans and broader market outlooks. With digital oversight becoming the backbone of Iraq's banking infrastructure, the country is building a foundation where data becomes a tool for empowerment rather than uncertainty, enabling policymakers to detect inflation trends earlier, curb unauthorized transfers with precision, and stabilize the dinar's value through structured mechanisms that were previously difficult to maintain. This new environment could enhance internal trust among citizens who want their banking experiences to be safe, regulated, and predictable, encouraging more Iraqis to move toward official banking channels rather than informal markets, which historically contributed to exchange rate distortions. In the long run, the more Iraq shifts toward digital compliance and financial accuracy, the easier it becomes for international analysts to evaluate the currency honestly and without the noise that shadow markets often create. This is why the digital green light has captured global attention, because it demonstrates a level of strategic maturity that aligns with economic rebuilding efforts and lays the groundwork for potential enhancements in monetary policy flexibility. Investors watching the dinar will likely continue assessing whether this momentum hints at deeper currency ambitions in the future, but it remains crucial for everyone to understand that digital modernization is not the same as monetary revaluation. Instead, it is an essential prerequisite that ensures any future decision, whether small or large, can be executed with transparency, accuracy, and resistance to manipulation. As 2025 continues unfolding with shifting oil markets, global inflation pressures, and renewed interest in alternative settlement systems, Iraq's commitment to digital progress positions the country in a stronger, more adaptable stance. For viewers who follow RV news, forex trends, and global currency developments, the real value in understanding the shift lies not in the hype, but in the structure being built step by step, because long-term financial progress is always shaped by infrastructure before policy. And as we close this breakdown, I want to invite you once again to drop your thoughts in the comments. Tell me how you interpret these changes. Hit the like button so this information reaches more people, and subscribe so you never miss updates that could help you stay ahead of the curve in the world of currency and economic analysis, because your engagement is what keeps this channel moving forward with clarity, consistency, and powerful insights.